Imagine logging into your tax portal,
Right.
right? You realize the government owes you this massive refund, but they completely refuse to hand it over. Why? Because you didn't save a highly specific digital file on a USB drive.
Yeah, it's incredibly frustrating for people.
Right. So, welcome to your custom deep dive. Today, our mission is cutting through the red tape of Mexico's 2025 annual tax declaration for individuals. We're using the official 2026 guidelines from ProDecon, which is, the government agency that defends taxpayer rights.
And it's a massive process. I mean, it touches millions of lives. What's immediately clear is this huge tension between, like, massive automation and really strict bureaucratic friction.
Okay, let's unpack this. Think of the Mexican tax agency, the SAT,
Yeah.
as like a strict club bouncer. You don't even have to file unless you meet specific criteria. Salaried workers often get a pass, but the exceptions are pretty sweeping. You're legally required to file if you made over 400,000 pesos, or, say, you stopped working before December 31st. But the multi-employer rule is what really catches the eye. If you had 2 or more employers, you were forced to file.
Right, and there's actually a very logical mechanism behind that. If you work 2 jobs, neither employer knows about the income you're making at the other one, right?
So sure, that makes sense.
Yeah, so when the tax authority combines those 2 incomes at the end of the year, it often bumps you into a higher tax bracket. And that simply wasn't accounted for in your monthly payroll deductions.
Ah, got it. The system also flags anyone with side hustles. So whether that's foreign income, renting property, freelancing, or earning through digital apps. Though if you operate under Resico, which is Mexico's simplified trust regime for small businesses, filing this annual return is actually optional.
What's fascinating here is how the tax code explicitly targets the gig economy. I mean, by singling out digital platforms, the government is really adapting its revenue collection to a world where, the traditional 9 to 5 just isn't the default anymore.
Exactly. So the government is smart enough to know all about your side hustle, right?
Okay.
But here is the irony. Because the rules are so strict on who files, the actual how requires rigorous digital preparation. They have this highly automated tracking system, yet they suddenly require you to do a ton of manual digital paperwork just to get through the door.
Oh, absolutely. You can't just log in and click approve. First, you need your RFC, your official Mexican tax ID number, to be active.
Right.
And you also have to ensure your registered address is classified as localizable.
Wait, localizable?
Yeah, that literally means the government has physically verified where you live.
Wow. Although, I guess if you are a purely salaried worker using the automatic return system, you do get a pass on that physical address verification.
True. But for everyone else, it is mandatory. Plus, you need an active password or an e.firma. That's the highly secure encrypted digital signature file we were just talking about.
So what does this all mean? If ProDecon notes that the tax authority's algorithms are already pre-filling my income deductions and retentions, why do I even need to check it? Shouldn't a fully digital system just be seamless? Are there computers making math errors?
Well, if we connect this to the bigger picture, the math isn't the problem at all. The input is, think of the pre-filled declaration like an automated credit card statement.
Okay, I'm following.
The government tracked every digital invoice you had throughout the year. But what if your doctor's office accidentally categorized a deductible medical expense as a generic retail purchase? The algorithm won't catch that.
Oh, wow. So you have to audit the auditor.
Exactly. The sources explicitly urge taxpayers to verify payroll receipts and ensure personal deductions actually meet fiscal requirements. Pre-filled data is only as good as the employer's compliance.
So you're basically disputing charges on your fiscal credit card.
Yeah.
And verifying that data leads to one of 2 outcomes, right? A tax bill or a refund. And the government has strict rules for both.
They really do. Let's start with the bad news. If you owe taxes, you get a specific capture line and a deadline.
But you can actually pay in up to 6 installments, right? As long as you file and pay the first part by April 30, 2026.
Yep, that's the hard deadline. They do give you some breathing room.
Well, here's where it gets really interesting. Let's say you overpaid and the government owes you more than 10,000 pesos.
The best case scenario.
Right. But they don't just wire it to your account. To claim a refund over that threshold, they force you to use that secure e.firma to submit the return.
It definitely adds friction, but it functions as a critical security measure.
Yeah.
It's really there to prevent identity thieves from routing large tax refunds into fraudulent bank accounts.
That is definitely good to know before you just click submit. And look, if you're feeling overwhelmed by all these digital hoops, Predican offers completely free assistance. You can use their chat, phone, or even in-person appointments to help navigate it all.
Which is an amazing resource.
Totally. Oh, and a cool cultural detail from the 2026 paperwork. It officially bears the title Año de Margarita Maza, which honors a key figure in Mexican history right there on your tax forms.
That's a great little detail. And stepping back, this raises an important question.
Yeah.
As tax authorities worldwide become increasingly sophisticated at tracking digital transactions and pre-filling our data, will the traditional annual declaration eventually disappear entirely? We might be moving toward a future where we simply review an automated push notification on our phones, tap approve, and just move on with our lives.